A new round of nuclear talks between Iran and Western nations starts Thursday in Geneva. Iran's top negotiator says it is possible that there could be a preliminary deal as early as this week. Sharon Epperson takes a look at the potential impact this might have on the price of oil and on U.S. consumers.
One of several factors contributing to the sharp drop in global oil prices in recent months has been optimism about reaching a deal over Iran's nuclear capabilities. Fears the country is developing nuclear weapons has kept the international benchmark price for oil above $100 a barrel for almost 3 years.
There's a $10 to $15 risk premium in the price of oil, and it's been there for quite a while, just related to what's going on with Iran and its nuclear program and the West's reaction to it. So any progress they make that starts to take away some of that concern about Iran helps to lower the price of oil.
Since late August, Brent crude prices, oil's global benchmark, have tumbled more than $10, from $117 a barrel to just over $105 this week. International sanctions aimed at curbing Iran's nuclear program have cut in half the country's oil exports, which topped 2 million barrels at the beginning of 2012. But more moderate leadership from Iran's new president, Hassan Rouhani, who took office in August, has eased tensions and raised expectations that sanctions may be rolled back. On Thursday, Iranian negotiators begin another round of talks in Geneva with leaders from 6 world powers, known as the P5+1. If negotiations are successful and sanctions are lifted, about 1 million barrels per day of Iranian crude oil may soon be back on the market. If that happens, global oil prices may drop as much as $15 a barrel. But that's a big if.
We give slightly better than average odds to an agreement in principle right now. What we're seeing is an unprecedented enthusiasm on the part of the U.S. government, taking steps that haven't been taken in more than 3 decades.
Even if the outcome of this meeting fails to result in a concrete deal, some traders say the slide in oil prices is also likely to continue.
Fundamentally, the oil market is weak to begin with. We're awash in oil, not only in this country, but around the world. So I'm looking to short it anyways. And adding Iranian oil to the market only makes crude oil weaker from where we are right now.
And lower oil prices are benefiting American consumers. Gasoline prices on average have plunged about 25 cents a gallon since September. At $3.23 a gallon, the national average is at the lowest price of the year. For Nightly Business Report, I'm Sharon Epperson.